In 2026, algorithmic trading is no longer a nice to have. It's not a niche skill. It's not something that only quants or hedge funds have access to. It will be the baseline requirement if you want to compete in markets at all. And I don't mean that dramatically. See, the environment that we're in now is very different than where we were 5 years ago. And it's changing in a way that makes markets and manual trading and staring at charts all day obsolete. Now, to be clear, I'm not saying you can't take swing trades or have longer term horizon bets, but as it relates to day trading, algorithms are taking over big time. Hey, welcome back to the channel. If you're new to the channel, my name is Robert Miller. All we talk about here is finance. We've talked about digital assets, we talked about trading, but in this video specifically, I'm going to continue to dive deeper into algorithmic trading and why I believe that this trend is here to stay. See, it's already 2026 and markets are already led by machines first. Humans just haven't accepted it yet. And that's the uncomfortable truth. See, a lot of the trading that's going on in markets now is not against people. You're trading against systems, models, automated execution, AI-assisted decision loops that have great speed, consistency, and emotional neutrality already built into the software. And typically when you're trading and clicking buttons, you can't react fast enough, especially if you're trying to take advantage of a short-term trade in those trading windows. You can't process all the data that machines can process, and you can't execute consistently under pressure. And if you've been trading for many years manually, just like I was a few years ago, you already know what I'm talking about. See, this real shift isn't coming, it's already happened. And the only thing changing now is who adapts it in time. And look, if you think I'm kidding, look around. We have AI humanoid robots now coming into our homes, and the future of the labor market is actually looking very glim. So the future of humanity and the future of society is a glaringly obvious AI-enabled and robot-enabled trend, but it's only going to be great for those that can harness that type of technology and to have the advantage. So why aren't you thinking about adopting this into your portfolio and having edge with software? See, in the past, a lot of traders, especially people that were coming in, would learn a specific setup or a specific stock only. They would trade it manually, they would extract edge from that specific stock for years. And that era, I'm not saying it's going away, I just think it's going to slowly erode over time because people are going to build systems specifically for that. And manually trading won't be the same going forward because we can just enable these tools to take care of it. They can actually spot those patterns faster. They can identify if there's crowding on a specific strategy. They'll be able to identify the inefficiencies and close things out automatically, which means, in my opinion, I don't think that the edge is only going to come from seeing something that others don't. I think it's going to come from people that build systems that can adapt faster than the decay of a strategy. See, algorithmic trading isn't necessarily about predicting better, and there are algorithms that do that, but I think more importantly, it's going to be about testing better, iterating continuously, executing without hesitation. And so if you're not systematic by now in 2026, you're going to be behind. Now, when it comes to trading or when it comes to algorithmic trading, most people focus on the P&L. And while that is extremely important, I don't think that's the real risk here for the trader. See, capital doesn't care about effort, it's going to care about risk-adjusted returns, consistency, and scalability. So whether you're doing this yourself or whether you're working with investors, people aren't really going to trust, I feel good about this trade anymore. The big funds won't deploy capital into anything without data-backed systems, and large allocations are going to be through repeatable processes, not just personalities. See, manual traders don't just underperform over the long term. A lot of times their strategies can decay and they're unallocatable because it doesn't scale. So you'll notice that the largest hedge funds in the world play only a few games. A lot of them will only pick a few strong businesses that actually have repeatable systems to invest in, or other hedge funds will allocate to algorithms to trade on their behalf. In fact, one of the most well-known hedge funds did over 66% per year for 30 years. They only use algorithms to trade the market. I'm talking about Jim Simons and his fund. So again, algorithmic trading isn't just a tool, it's actually now looking to be more of a credibility requirement for institutions and for professional investors. And look, this isn't just about markets, it's actually about labor. And this is where things get a bit more serious. See, AI is eroding the labor market from the top and the bottom. High skill roles are getting automated, mid skill roles are getting compressed, and low skill roles are getting completely replaced. And trading manually is still labor. Now, algorithmic trading, however, is simply capital and systems. And so if you put yourselves in an institution's, position, are you going to trust the manual trader that has all these feelings and emotions and all this stuff? Or are you going to lean a little bit more towards algorithmic and systematic trading that doesn't have emotions and that will always be there performing in the market? Now, someone can still manage those systems, but my point being is that the largest funds and the largest companies are looking to adopt AI to replace a lot of the repeatable tasks that humans typically do. And if you're an investor or a trader, you might want to start thinking about allocating and having systematic approaches to your portfolio. And now we're really living in this world, and it's accelerating, where time-based income is becoming fragile and system-based income is actually becoming more dominant. See, algorithmic trading allows you to decouple portfolio performance from the amount of hours that you work. You can actually scale your positions with decision making without the stress of scaling up the position size and manually managing it. And you can also operate outside the traditional employment entirely. And typically, as time goes on, as AI takes over, the less labor that's needed, the better, which is why I've gone into this very heavily over the past 3 years. And so if you've ever wanted to add algorithmic trading to your portfolio, there's going to be a link in the description where I break down our strategies, how my clients and I are using this to achieve better portfolio performance. So if you want to learn more about algorithmic trading, you can go ahead and click the link in the description below. There's a video breaking it all down, and you can book a time with us if you like what you see. So with that said, I hope that you enjoyed this video. Be sure to like and subscribe, share this with a friend or family member, and I'll see you in the next one.